Um, okay, so we want to continue on our market structure where we stopped in the last class. So today class we are going to be looking at the market structure on the chart. So we can decide to make use of GBP USD. I want to bring out the types of the market structure where we have the three types of the market structure. We have the trending market. In the trending market, we have the uptrend market and we have the downtrend market. You can call the uptrend market the bullish market and the downtrend market the bearish market. So we also have the second types of the market structure where we have the ranging market and we also have what we call the choppy market. Now we want to bring out all those three types of the market on a real chart. Now to bring out the market structure, the types of the market structure on the real chart, we can make use of our direction line to bring out our market structure. If it is an uptrend, trending market, or a ranging market. You can see where I'm going to bring out this particular direction and we are going to figure out what types of direction is this particular trade. You can see the way I'm drawing it. So these types of markets, this particular market, want to figure out this particular trade from here to this side. Want to figure out what types of trend with this market. Is it a ranging market? Is it a trending market? Is it a shopping market? Now we want to find out what types of movement is on this particular candle chart. So is it, if it's a trending market, is it the uptrend market or a downtrend market? Now look at this our arrow, we bring it outside, figure out what types of direction is this particular market going. You can see this is our higher high. This is our higher lows. This is our higher highs. This is our higher lows. If you remember, I said in an uptrend market will be having higher highs and higher lows. Higher highs and higher lows. These are our higher highs. We also have higher highs these days. We also have higher high. These are our higher lows. These are our higher lows as well. These are our higher highs. These are our higher lows. So this is an uptrend market. An uptrend market. You can see it is in a what? An uptrend market. This particular chart is what? They are what? In an uptrend market. This particular chart is in an uptrend market. It's forming higher highs and higher lows, higher highs, higher lows. It's forming the can see forming higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high, higher low, and higher high. So this particular movement of the market from this place to this particular side, it is what in an uptrend market. Now let's look on other examples of this particular market. So this particular market from here to this side will tell us what type of movement the market is making. Now we want to find out the movement from here. You can see want to find out if it is an uptrend or in a downtrend market. Let's bring it out, find out the movement of this market. To find out what this market is giving us. The market is giving us lower high, lower lows, giving us a lower high, lower low, give us another lower high. When the market comes to this side, give us a lower low, which is above this extreme lower low. It is above it. You can see. So when it comes to this side, you can see we form an equal lower high. You check out this side, you find out that it's weak. This week, I have the lower high and lower lows, lower highs, lower lows, lower highs and lower lows. When it comes to this side, it failed to what? To trigger this, to sweep this particular lower low, and instead it moved up. After moving up, then it continue with what? Its lower highs and lower lows. Continue with what? Its lower high, lower lows, lower high, lower high, lower lows. Continues with his lower low. You can see in this particular scenario, there is something we call liquidity and inducement, but we are not going there today. So this particular market that we brought up from that place, we have the lower high, lower low, lower high, lower lows, lower highs, lower lows, which it did not sweep this particular, it should be in this form, but market refused to sweep this particular point, and instead it moved up to this side. And when it comes to this side, it sweep this lower low that is here. Take this one and continue with its downtrend market. Now, this particular movement is also the second type of trending market. So this is what our downtrend market, downtrend, or you can call it a market, bearish market. So we have in this place from this side to this side, we have what we call the market is in what? In a bullish market. That's in an uptrend market. And when it comes to this trend line, you will find out that the market break this particular zone. In the next class, we are going to be talking about all those trend lines and market structure, shape, change of character, and so on. So when this market comes to these higher highs, you can see it break down this particular trend line. And when that the trend line is in an uptrend and the market break that particular trend line, then it's going to what is about to change its direction. You can see when the market starts from this side, having the higher highs and higher lows, higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs and higher lows. You'll find out that the market break this particular trend line. We call this line a trend line. It is used for a trending market, in an uptrend or what a downtrend. Now you find out that this market break this particular trend line and what change its direction. And this direction that is here, this our direction is what we have in this particular case, this particular scenario, where we now have a downtrend. We now have a lower low and a lower high and a lower lows. Then the market fails. You will find out that I said it's a week. The market failed to sweep this particular point at this side. The market failed to sweep this one, take this high, and the market failed to. I did in the market take this particular lower high. It took it up. Then we can now say, okay, probably we can wait. Maybe the market is about to continue its trend. But when it comes to this side, the market refused to take this high. Then it's continuing with what? It's lower, a new lower low. Then the market have what we call an indecision in this place. You need to have an indecision, which is a shopping market. You can see from this side to this side, the market have no clear direction. The market have no clear direction in this particular case. We'll find out that if we move to this lower time frame, you'll see all these market, that the market refuse to form the higher highs and higher lows in this case. When we move to a lower time frame, because this is a daily time frame, we have a daily time frame, we have the monthly time frame, we have weekly time frame. You can see the types of time frame we have here. We have the monthly, we have the 12 months, which is a yearly time frame. We have 6 months, we have 3 months, we have 1 month, we have 1 week, we have daily, we have 4 hours, 3 hours, and so on and so forth. You'll find out that this higher time frame, which is a daily time frame, when we move to this lower time frame, you'll find out that this particular market is a shopping market. I've told you that we have three types of what market movement. Now, this types of market movement that doesn't have a clear direction is what we call as the choppy market. Choppy market. Choppy market.